Hi, Dan.
Trevor, can you hear me?
I can. Can you hear me?
I can indeed. I am just making you the boss. Okay, done. So you should be able to control,
Okay.
get your screen up. Yeah, we're looking at the relative rotation graphs.
Okay.
Oh, they're looking very squiggly this week.
Yeah. Well, hopefully not too much like spaghetti.
Right. Okay, now we're looking at, what are we
Okay.
looking at
I'm
here?
ready when you are.
Okay, well, we've got another minute before 9
Yeah.
o'clock. Let's make sure that we're on time. Oh, well, it's just turned 9 o'clock, so I think we can get started. Okay, hello everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. However, we do very regularly spill over that. If you have any questions for Trevor, please don't be shy. Ask them in the questions tab of the GoToWebinar control panel, and I'll pass those on to him. Trevor won't be able to check them himself, so just to make sure I can check them. We'd like to remind you that this webinar will be posted on our YouTube channel in a couple of hours' time. So if you'd like to watch it again, you can do so there, and we'd love it if you'd also subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded from the handouts tab. It's in the same GoToWebinar control panel. If you're having any problems locating it or downloading it, please just let me know and I'll send you the link or I'll give you some instructions. The first handout is a guide to the different indicators that Trevor's talking about while he's doing the webinar. And the second is a CFD guide, so it explains the different products that we offer at FX Choice. If you're watching on YouTube, these handouts will be in the description box below. For those of you who don't know Trevor, he's a seasoned veteran of technical analysis and trading. He's been going for over 40 years. He was global head of technical analysis at Bloomberg, so we're very glad to have him today. Trevor, so over to you.
Okay. Thank you very much, Dan. Let us start with an overview of the currency markets using the relative rotation graphs, which many of you will be familiar with. And today we have a very clear message. So just very briefly, what this is we've got the G10 currencies here, how they are ranking on a relative basis. So Canadian dollar, most to the right here, strongest currency versus the US dollar, weakest Swiss franc, surprisingly, Japanese yen over here, and these tails are where it was yesterday, Friday, the day before, etc. We've got this rotation going on. You can see that it's going clockwise. That's normal behavior. This being in this quadrant called the leading quadrant means that the Canadian dollar is strongest versus the US dollar, strongest of all the G10 currencies. Also, it's the highest in the y-axis, which means with high positive momentum. So we've got a very clear message here. We've only got two currencies outperforming the dollar, Norwegian crown and the Canadian dollar, and the Canadian dollar is doing this most, if you like, and so this is the preferred way of going against the dollar. If you want to go short of a currency versus the dollar, then Swiss franc and Japanese yen are your choice currencies. So that's the background. Let's get back to the charts now. And so here is now the euro. And so the euro is consolidating really if I show you the weekly chart just to get the context of this, we've got this cigar, as I call it here, this enormous consolidation in 2020. We've come all the way back to it now. It's rather bearish. It's moved off this topping pattern. So let's go down to the daily chart, and this is the drifting pattern now that we've got with the lower highs in place. We moved down from I had this as a flag. We've talked about this on these calls. This is the flag pole. This was the minimum price objective of the flag, which is exactly where we got to. We bounced to the breakdown point here, more or less at 120 there, and we've struggled at the 120. There's a lot of resistance above us here, and then now it seems to be drifting lower to re-challenge this low here, and which it does look to me like it's going to eventually break. And then the next objective for that then would be the 161.8. So this is A, B, C, this is D, but D plus if you like. 161.8 is 1.16 here. So if we do break this low here, the low being 118.34, if we do manage to break that, then I think we're going to fall quite rapidly towards that level. The resistance for the week is going to be the high of 119.90, but I really think if it were to trade back up to there, there's so much resistance above that it will struggle to make any progress there. Moving to the pound, please ask any questions. I do like questions, and you're not interrupting me if you want to
Trevor,
ask me a question.
We actually have had a question. We actually have had a question, but it regards the Aussie dollar. It was a request to take a look at the Aussie dollar, Japanese yen, and I know that you're looking at the New Zealand dollar, Japanese yen later. So I was going to ask you later if you wanted to take a look at it. That's all.
Okay. All right then. Okay, I can do that. So we are going to sterling now, to cable. In the weekly chart, just to remind ourselves of this picture here, it's trading between, I really want to bring this back, let's bring back some history here. We have to go back a long time, but this is dominating the chart really for us now. 2018, this big double top, which started the move down, which went down for 2 years in sterling. Now we've come right back up and we're challenging it. We've come off it quite hard, and then we are, well, I think, stabilizing in this uptrend, long-term uptrend here. The MACD is still negative, it's not positive. The RSI is coming up, but I'm hoping that I'm expecting this to stabilize here, and let's have a look at the daily chart to look at that in detail. So this is the stabilization, which I think is going on. It is supported by this consolidation from January this year. So we're resting above it. We broke up, we've come back, retested it, and I think this is a good support level. And I think we should rest here. There is support at 137.77, that big cigar there, and resistance at 140. But remember how bullish that weekly chart is, and I think we're ready to challenge that big double top and move higher. Amazingly, that is how it looks on the chart. So stabilization, probably extending that during this week, and then moving up to challenge this high from the end of February, wasn't it? At 142.35 was the high there. Then the GBP euro is coming up rather slowly. Okay, so there's the daily, here's the weekly here. So we're in a nice uptrend here, outperforming the euro. The MACD has turned down. We had a bearish divergence pattern on here on the RSI and the MACD, warning us that this spike top is more of a resistance than you would have expected from such a brief top. But very good pattern of rising lows in here, and it does look as though we're continuing to move higher, and we should clear that top. I'm surprised actually it's finding such difficulty with such a minor resistance level, but we have stalled. We've got divergences. It's holding at that level at the moment. Definite loss of momentum there. So that spike high is at 117. I think it's going to struggle a bit more, to be honest with you, before it makes that break up. Support at 116, and the move to the double top could be fast after this breakout here, which I do think will happen. This pattern of rising lows is very bullish. The moving averages are very bullish. Everything is indicating we should eventually go higher, but it's being stifled by that, surprisingly, by that spike top. The Canadian dollar, which we mentioned there, our best way of participating in the against the dollar, And so what have we got here? Let's look at the weekly chart here. Well, there it is, down and down and down. That's down and down and down in the dollar, and that is the best looking chart if that's what your view is. Just to bring in where have all these lines come from, we broke this 2018 low here and then have come back to retest it. That's what I think is happening technically. Just to remind you, I know it's a long way away, but 122.40 will be the next significant low if we make the breakdown, which I do think we're ultimately going to do. So we made the break. We're retesting the break. Personally, I do believe that this will turn over. So that break point is in here. This is the retest here. And so I think that this rally will peter out and the pattern of declining highs will exert itself. And I think that it's just a matter of time really before this turns down. And this leader, the weakness of the dollar, strength in the Canadian dollar will reassert itself. So any rally here in the RSI above 50, for example, as a swing trader would be an opportunity for me, but I fear we're actually not going to get it. I was going to do the New Zealand dollar, Japanese yen, because we've been talking about it. I've been very bullish of it. It has stalled here now, two tops here. It's not a double top unless we break this low in between the two tops. This is a weekly chart. That's at 77 pretty well exactly there, which is also a 38.2% retracement level of this advance here from this year's advance. It is stalling here now. We've got a bearish divergence on the second high of the double top on both the RSI and the weekly MACD. So it looks as though we've got a serious intermediate top in place here. The threatening level, of course, is that low there, 77 low. That would turn it into a double top and then would indicate a fall at least back to the 61.8 level at 75.80 or this previous high here, which is resistance point, which would become chart support point here, this January high here. But the trend itself is still strong, so it's always we have moves against the tide, waves of move against the tide, and we're having one now which could develop into something more, but I wouldn't be surprised if it doesn't form the double top properly. It has to break the 77 level for this to be a double top, and even if we get a double top, it's just an intermediate interruption in the long-term bullish pattern. And then Dan, what was it you wanted me to have a look at?
Yes, we had a request to check the Aussie dollar, Japanese yen.
Okay, I have to put that in. So I would do the Canadian dollar, Japanese yen, if given choice. What happened there? Did it come in? No.
Not sure what we're looking. No, we're looking at.
Yeah, no, that's not it. That's Norwegian crown. I didn't insert.
Oh, I see. You've done it like
The reason I've got the list is quite slow is quite small. It's because I want to have it not too crowded. I have other lists like
very wide,
list.
Very wide.
So where's it gone now? Australian dollar, Japanese yen. Oh, here it is.
There it is.
Okay.
There we go.
All right. So let's have a look at the weekly first. Well, this looks a bit like what we were just looking at, doesn't it? Here. So we've got a strong pattern of rising lows in here. We've got these two tops here. They're very close enough together to call them the same top. We've got a divergence here, crossover of the MACD, indicating an intermediate top possibly in play. However, in the chart we were just looking at, we were testing we were closer to the pullback low. So for this to be a double top, we have to break 82. We're a long way above that now. So let's go to the daily chart. So the daily chart, we've come down here, and it's the 82 level here. That would make it a double top and would be a serious problem for the market. But at the moment, I really think this is just a correction. We have come down to below the 50 in the RSI. So swing traders will be looking for, in the next day or two, a swing back up, nice white candle to perhaps get long or add or replace whatever their position is right now. It's not unusual to hesitate at a previous high before you break it. That, I think, is what is going on here. The trend is very strong, and I just think it's an interruption in the trend. I would have chosen the Canadian dollar versus the Japanese yen personally, because the Canadian dollar is significantly stronger than the Australian dollar currently. Okay. Right, and so that's it. Now moving on to Bitcoin and the cryptos. Again, I'm going to go to my RRG chart here, and here we have the Bitcoin, and I've just put in a few different ones here. Let me just stretch this out a bit so you can see it a bit better. There we go. Maybe stretched out a bit too far. So what have we got? We've got the dollar in the middle. All these are to the right of the dollar. That means they're stronger than the dollar. They're all in the top right-hand leading quadrant. That means they've got positive momentum as well. The direction they're in is not good, and that reflects the recent short-term hesitation in the cryptos. But the Bitcoin is furthest to the right of Ethereum and Litecoin group, and it is actually, when you populate it with other less popular cryptos, it is also to the furthest to the right. So of all the cryptos, the best one to be in, if you want to limit your holding to one, is currently Bitcoin. So now going to Bitcoin itself. And here it
Trevor,
is.
can you hear me? Trevor, can you hear me? Just before,
yes.
just before we go on to Bitcoin, we've got a question from Gregory Amos. Thanks for your question, Gregory. He asks, as a swing trader, do you look at catch price as it clears resistance zones, example, New Zealand dollar, Japanese yen, or do you trade it through those zones? Would a scalper or intraday trader trade through those zones?
Yes, I would say that the swing trader, and of course there are many meanings to swing trader, but what I mean in principle is people that are buying the dips in an established trend. And so here you have a trend up. Here, this is not Bitcoin. This is Bitcoin futures. That was. So we have an established trend up here with higher lows in place. Here we had a swing down where the RSI went below 50 and then went below 35, in fact, and turned up. Same here. And so this was a swing. This was the tide. This was the wave moving against the tide. This was the wave moving against the tide. This is the wave moving in the direction of the tide. Now, how you trade that tactically after that, of course, it isn't a straight journey. I'm expecting this to go much higher, up to here. This is a projection from A, B, C, D move here, but of course that's a long way away, and much will happen between here and there. And so I would take notice of these resistance. It depends on you, your attitude to risk, what sort of horizon you've got for your trading. Personally, and this is only me, and that's not you, definitely not you, and don't think that because what I do is what you should do. I'm different from you and all sorts of things. I've got different amount of capital, I've got different horizon, I've got trading many different things, and I'm trading a portfolio which I'm trying to diversify. There's all sorts of things which make me different from you. But for me, the horizon I'm looking for is around about a monthly view. This sort of thing is what I try and capture, and I hope it's going to be that sort of thing, which would be typically last for about 4 weeks on average. There, that is probably, I would suggest, too long for many people, you know, because I have to take swings like this in my stride. Yeah, I actually was stopped out on that, to tell you the truth. But that's how it is. I'm not worried about that particularly. I would have stopped out at a profit, incidentally, having bought here earlier on. But it was disappointing to get stopped out on that washout. But you know, I've ways to trigger myself back in, because ultimately I think we're heading to be there. So the journey, I think, will resume eventually. So that was a rather meandering response, but was it in response to your question, Gregory?
Let's hope so.
Yeah, let's hope so. Okay, I don't think, I think he was talking more about these intermediate resistance levels and scalping. I'm not a scalper. Okay, I don't do it.
He says, yeah,
so when he asked me, would I?
He says yes. You answered his question.
But that doesn't mean it's wrong. Okay, that doesn't mean it's wrong to do it. It's just that not what I do. Okay, that's you know, it's not the type of trader I am. So Bitcoin, we are resting above this high, this February high here, consolidating above here. It's quite disappointing after that break. I was very excited at that point there. I thought, hey, we're on our way. And that's the lovely sort of candle you do get when you burst ahead. But then it swung viciously back early last week, and enough to stop me out as well. But I think that overall the bullish case is not damaged, and I'm looking to re-enter. A bit of a worry for me as a bull is that this might be a wedge pattern here. We haven't got 3 points on the top end of the wedge, which is what we do need, strictly speaking. But it is, we've got that false break high, typical behavior in wedges. We've still got the rising low pattern here. And so I really don't want to see that this uptrend line broken, because I don't want to think about wedges, because that would give me a minimum price objective of about 80,000 downwards. So I don't really want that. So at the moment, it's just stalling above the previous high. I hope it will gain its footing this week and resume its advance. The RSI is not really saying much. It's about neutral. The MACD is negative, reflecting this stalling point here. But it's a good place to hold if it's going to hold. If it doesn't hold, then I'll be looking first to the 38.2, which is 3885. But I've got a feeling that, no, it's not 38.8, it's 61.8 actually. Yes, 61.8. It would be, no, I have to measure this again, sorry. So it would be from here to here, it's a different measurement. So it would be the 38.2, yes, it was 38.2, 50% here. And then I'd be worried actually that this could get all the way back to 61.8 before it picks up any even minor resistance from this consolidation in here. So I don't want to see it break down. It might do, and I'm not currently long if it does, but I'm hoping it's going to stabilize here, and this RSI just come down a little bit more below the 50 level, which is what I need to have my setup to rejoin the move to the upside. But if it doesn't and keeps on going down, breaks this uptrend line, then I won't buy. Yeah. So I must control my feelings. You know, my feelings, has got really nothing to do with my trading. Ethereum. A similar chart as you would expect. Here we've got a much more pronounced consolidation below us here. We've got the cigar down here. We've got the cigar over here. So we've got these two consolidations here, and we're forming now a substantial one. But this, rather than being above the February high, is below it. So there's much more resistance here. So as we saw in the RRG, if you are bullish, the Bitcoin is preferable over Ethereum. And then Litecoin is very much like Ethereum. We've got this consolidation here, which is substantial. We broke up, then we came back to rest on it and formed another smaller one here. We're drifting here, but we're consolidating below the February high, not above it, like Bitcoin. And so Bitcoin has the better chart of the three, and it is also currently the strongest of the three. Moving on to gold now. Gold is really, I hate to ever call gold a bit boring, but it is a bit boring. Lower highs in here on the, stuck on the daily chart, don't know why. Yeah. Don't know why, but we are coming down here, lower highs in play, support at 1680. We're losing momentum. Again, here the RSI's turned down through 50. 50 is probably as high as an RSI is going to get when you're in such a strong bear market. And it's just triggered down through there. So that's my setup in play for a sell there in the direction of the trend. And then I would expect another impulse reaction, completed reaction, another impulse move, take us through that 1680-ish low there again. So it does look as though this reaction wave is already complete. We're losing momentum here now, and looks as though we're going to do another completed pullback as completed. Oil market now.
Trevor, can I just stop? We've got a question, Trevor, about metal, but I think actually you may have just answered it. It says, where do you expect the yellow metal is heading? So I think you just, do you expect further downward move?
Yeah.
And also,
what I would do.
The question is continued. If the yellow metal do you expect the 1690 level?
Yeah, look, here's what I would do. Let me just show you here. Let's say that I enter this trade here because I feel that this pullback is complete and the momentum loss is triggering another move in the direction of the trend here. So the pullback is complete. It's not quite yet, by the way. I'm not going to go into detail of how exactly I do that. But what I will do is that if I say this is A, B, C, where is D going to be? I use Fibonacci projection for that. Here is A, here is B. So I take the length of AB in dollar terms, subtract it from C. And I notice the 61.8 is the previous low. But where is D? 100% is down here. 16, 15, I would say, is where I think that this next swing ought to go to, with that 1 month sort of horizon to it. 1600 obviously is a big support level, and I would it would also break the pattern of the rising lows here, which would be disastrous for it. And look at the importance of that level there. High, high, again high. And this is the place to fail if it's going to fail. There. And I do think it might. So it's going to be contained by that resistance, which is a multi-year resistance level, and break this pattern of rising lows. It's ever so close. And so we could swing back really. Oh, this is crude oil. What has happened to me here? Yeah, sorry. So ignore all that. Why did that happen? Very weird. Actually, let's change that. It's also embarrassing that I could talk about crude oil. I think it was gold, but they're not all that different, to tell you the truth. Okay, let's go to crude oil. Obviously not paying enough for my my system here. Okay, well, I've told you the story there, the multi-year high, and I'm very worried about crude oil, Brent crude now. Rising lows pattern is under threat here, and we probed through it, and it's bounced a little bit here now. Very similar pattern to the gold in the way, except the gold is in the downtrend. But we're testing this level of rising lows. It's very important that it does hold. It's come back 50% of this move, the February advance here. And that's very important. These two lows here, that's very important, because this is the definition of going up, is the rising lows pattern. We've got the bearish divergence in here. The MACD is of course pointing down. So I got the trigger in here, and I think that it will break down. Actually, I'm really beginning to think it is going to break down now, because this is too, well, you know, I'll wait until the pattern is broken of its low. These lows are crucial to hold, to keep this definition of the rising lows pattern, which is the definition of the rising market. Here we are at the significant resistance area, multi-year resistance area, and it seems to be stalling. I won't call it yet because it hasn't happened yet, but it could be a top, and we could be you know, just continuing the range. Okay, sorry about the chart problem there. Okay, moving now to the stock market, the US 500. Here, so again, we've lost my label here, but we're still going up. In the long-term perspective, the rising lows pattern is still intact. We have had a pull down late last week. Disappointing, having just very briefly made a new high, and then you could call it a false break. But when I see these kind of things, it always worries me of a potential wedge in the market. We've definitely lost momentum. High, lower high here, high, that brief new high here. So it's quite a worrying picture here. So I think we're coming off. I'm doing some measurement here, and excuse me, that was a projection. I'm not projecting anything yet. Just do the retracement from here up to here. So the low today so far is 38.2. That might be enough to hold it, and we get our stability, or we could come back to the 50% level into the sort of consolidation of here. But you know, it is looking iffy. I mean, but it keeps looking iffy, doesn't it, when it's on, you know, and it keeps going up. But this low was not much higher than this low, which is a bit disappointing. That high failed so easily and quickly, and we'll have to see how this develops. But you have to respect the long-term pattern. Don't fight the trend. The trend is up for the stock index, but it is really due for more than a minor pullback. It's due for, you know, overdue for much more than that. So I'm very cautious for that. But so drifting at the moment, you've got to say the pattern's intact. So look for levels, likely holding levels like the 38.2, like the consolidation, like the 50% level. On the UK 100 here, I'm not sure what to think about this in that we've got this triangle here on the weekly, big triangle here. And if you draw it like this, we're still contained by the triangle, but we've fallen shy of that point there. Definitely got the 4 rising lows there is clear, but the problem is this line here. Is that right line? I've drawn it differently here on the daily chart. I drew it with this time touching that point. I had hoped that this was the breakout and then the retest, but that doesn't look like it is correct now. And so I'm really going to draw this one the same. I know it's cheating to do it after the fact, but I've got new information as I did do originally on the weekly chart. So it looks as though we're still inside the triangle here, and it's looking weak inside the triangle, and it's looking like it's coming back to test support like the 20-day average, this consolidation support, maybe even back to this low here. But I would like this uptrend line, which is so clear with 4 points on it, to hold. That's at 6540 at the moment. So I'd like to see it hold between here and there in order to hold its integrity as a bull market. The ADX has moved right down to 12. That's a very low reading. So that's an indication of the trading range behavior that we've got there now. So all the power is out of the trend for sure.
Trevor,
Trevor,
we just have a quick question.
Yes.
We have a quick question from Jasmine L. Thank you very much for your question. He asks, do you think all US indices will pull back further, including US 100?
I think they are moving in tandem, but I think that the US 100 will pull back more, and it already is weaker than the broader based, because the tech stocks themselves are some of them are looking quite toppy and stagnating, really, and finding it hard to make new grounds. Even when the S&P was making new highs, it was not being driven by the tech stocks predominantly, as it, that used to be the golden rule. It was the tech stocks, but it's not now. I'll look at that. I'll show you that in a moment. Actually, if I could just do the DAX, I'll answer that question better in a second. If you don't mind.
Not so.
Let me, if that's okay, Jazz. Yeah. So the German, the D30 here, we have this channel in here, and we've been, you know, really quite regularly contained by it. It's not a great line here. I should make it a dashed line here. The RSI is strong. It's just come down through 65 from above, indicating a correction is due. If we do correct, I think it will correct itself down to the 14,200, where it will pick up these two highs in here, which are very, very solid support. So it's a bull market, and I think if this correction develops, if the RSI comes down to 50 or so, I would expect it to find its footing at those two highs there. So for me, this is a building opportunity on the long side. Okay, moving on to the individual stocks. Let's just look at the techs. Just speed look at the techs. So here's Apple. Okay, I've got a head and shoulders here. Left shoulder, head, right shoulder, minimum. Here's the neckline, minimum price objective not yet met here, but that doesn't look great, does it? Amazon. Again, you could make the case shoulder, head, shoulder here, but anyway, it doesn't look great. It's broken its uptrend line. It looks quite saggy there. And what else? So we'll look at Facebook. Facebook, not the same. It's looking strong, but still below its high, but that one is looking better than the others. The Alphabet, we should see that one. Okay, look at that, flat. It's been flat since the beginning of February. They're not leading the market up, is it? Where is leading the market up? As I've been hopping on about, the banks. Look at Bank of America here. Lovely chart here, looking lovely. Bit of divergence here. MACD is nice and positive there. And then going down here, JP Morgan. Okay, again, looking good. We gapped up there on Friday, rather actually, as far as candles go, quite a negative candle there, but you know, that's only a minor message, but we're strong there. Oh, sorry, I neglected Tesla. We can't do that, can we? But look at Tesla. That great looking chart. Forget the name of the stock. It's head and shoulders here at the top. We have gone through the objective of that. This is a sagging, poor looking chart. As far as the banks are concerned outside the United States, I don't think it's as true there. The two best looking ones are BNP and Barclays. Barclays is looking pretty good here. So here we're pushing ahead strongly on Barclays. But other ones, take Deutsche Bank, for example. So it's more of a US phenomena there, the strength in the banking stocks is Santander here, flat here. So US stocks, the Microsoft, I missed that one out, I think, too. And you know, looking soggy. That's it. So really, that's your 100, isn't it? And so it's being led. It's a sector rotation and led by the financials, which is something you would pick up very easily on relative rotation graphs. For the moment, the tech sector is a drag. Mm-hmm. And since you're not chasing me away, there was one thing I wanted to say. I talked previously about Pfizer, and I wanted to just follow up on that. I was very negative on Pfizer, and that was great, and we did well out of that. But it's all changed now. It came back to 33.5, found support at its October-November low here. Yeah, technically a great place to hold. Broke the downtrend line, so that ended the move down. Now we're in an uptrend, but I will just warn you that this is heading for a very big cigar here area, so it could easily stall just above here. 36.5 through to 37.5 is a significant area of resistance, and the RSI is high and turning down already. So if you aren't already long, then it's a it's too late to get in, and you might be towards right at the end of the move, this current leg of the move. It seems to be a good place to run out of steam there. All right, sorry, do we have any other questions, Dan?
No, that's it, Trevor. That's it. Thank you very much, Trevor.
Okay.
And thank you, everyone.
I hope that that was helpful to everybody. And sorry about the data problem I was having there earlier, and with the weekly charts particularly, picking up the previous thing I'd been looking at. So I don't know what was going on there. Time to empty my cache, I think, is probably the answer to that. But thanks very much, Dan, for looking after us so well. Thank you all for taking the time. Thanks for your questions. I like the questions very much. I hope I answered them properly for you. And I hope what I tell you helps you. And have a good week. And may the trend be with you.
Thank you very much, Trevor. Actually, speaking about next week, we need to mention that I believe the clocks go forward an hour, don't they? So it'll be the webinar next week will be 9 a.m. London time, and we'll send out the usual reminder emails. But it might be a different time for you depending on where you are in the world. So as long as you keep in mind that the webinar next week will be at 9 a.m. London time, everything should be okay. And don't forget that we'll be posting this webinar to our YouTube channel in an hour or so. So if you came later and you want to watch the beginning again, or you just want to watch a particular part, please head over to our channel and don't forget to subscribe and click the bell to get notified. So I think that's it, Trevor. I think we can hang up. Anything else to add?
No, that's great. We should release the poor folk and let them get on with their lives.
Thanks
all of you for spending the time, and thanks, Dan, for looking after us.
Cheers, Trevor. Bye now, everyone.